Hello, the euro has broken out to new highs and the move has been accelerating quite rapidly. It has been quite painful for dollar bulls like ourselves, yet we believe that the risk reward is slowly getting exhausted and that this breakout may be a trap. So first, let's look at the move on our FinGraphs platform. This is the hourly chart of the euro dollar. And as you can see, it has accelerated quite impressively since the middle of last week, and especially from last Friday. We can see that now our impulsive targets have been achieved. They were meant to lead us into the 121.40 up to 122.60 levels. We could always calculate our extended impulsive 2 targets, but these are quite rare and they are often quite difficult to achieve. They would lead us slightly higher into somewhere between 123 and 124. Now, if we look at our risk index, it has now reached the overbought zone, which means it's still moving up. So there may be a bit more to go over the next day or so, but it is slowly getting exhausted, and we believe it could start to consolidate. Now, looking at the daily chart, a similar situation. We could see that from the consolidation that happened from September into November, the euro has accelerated up and broken out on Friday. Our impulsive targets are also achieved here. Our delta, or the volatility we calculate, so the width of our larger envelopes, is between 8 and 9 figures. So we could still calculate extended impulsive 2 extended targets. They could lead us up to 125 or 128, but we believe this is going to be difficult to achieve, as here our envelopes are touching each other, so this is a sign of market stress, and our risk index is already very much overbought. On the risk side, you could take the same 8 to 9 figures and multiply it by our corrective factors between 0.5 and 0.8, and that leads us back somewhere towards 118, 119, and possibly towards 115. But there's also going to be quite a lot of support to the downside because of all the work that we've been doing since the month of August here. Now, looking at the weekly chart, this basically gives a long-term scenario. We believe that the euro dollar is in a correction up, and that at the moment it's only a correction up. This correction up had targets between 117 and 124.60, and as we approach the higher end of these corrective targets, there's going to be quite a lot of stickiness in our view, and that prices will take some time if they are to breach above this resistance. The risk index is rather positive, still moving up, but and it's not in the overbought, but never really makes it into overbought if the move is just a correction. Now, we don't have a very long-term chart on the euro on our platform, so we went to TradingView to take a monthly chart of the euro dollar, and we wanted to show 2 things here. First of all, the downtrend, which we've taken from the close of the monthly candles here, moving down as a resistance line, and possibly showing strong resistance here in the 125 or slightly higher above levels. Now, resistance are made to be broken, but it also always takes quite a bit of effort and quite a lot of work, and we believe it's going to take, if it does, it's going to take more work this time, because there's also a lot of previous support around these levels. So you can see this one here around the 125s and a bit above. This one here, just where we stand now, pretty much, and then this one here, still slightly above. But there's a lot of previous support, and as we say, support turns into a resistance, and so in this corner here, there's going to be a lot of stickiness to the upside. Now, to the downside, previous resistance was around the 115 level. So if we were to correct back down, we'll probably find strong support around those levels. Now, summarizing the euro, the hourly is still trending up, but we believe that it's slowly getting overbought and should likely get exhausted over the next few days. The daily in a similar position, also in the overbought zone on our risk index here. So there's possibly a bit of momentum still going on, but it's gradually getting exhausted too. And the weekly is getting into levels where we think we're going to have quite a bit of resistance. Now we wanted to look at another pair which has had a very strong move. It's a cable over the last few days, and a similar analysis. Into here we had this very, very strong acceleration on Friday, and which is also getting slightly or slowly overbought, and impulsive targets have been achieved. Similarly, also impulsive targets are achieved on the daily chart, and also quite overbought at the moment. And on the weekly, well, it's still a correction, and we're getting slowly into the zone of that correction, so we may start to see quite a bit of resistance. Now, another chart which has been very, very strong over the last few weeks is gold. We're quite positive over the long term on gold. We believe it could possibly reach 15,000 by the end of this year. That said, at the moment, on the daily chart, we believe that we're slowly getting into or close to an overbought position, that we may break out slightly here over the next few days, but in general, we should see a retracement over the next 2-3 months before it actually takes off. And the hourly does give us this kind of extended state here. As we say, we've reached our targets here, and we're slowly getting overbought. So on gold, we might push a bit higher, but in general, we would still expect some retracement into end of February, March, and possibly revisiting the lows that we saw back in December. Now, the gold bucket index is also quite interesting. It's also quite positive over the long term, but it's interesting to see that it hasn't followed gold's quite as strongly. It's still corrective here, and it's coming into the resistance of our corrective targets. So we should start to see it rolling over the next few days. And it does seem also quite extended on the hourly chart. It has reached its targets, or almost the upper end of its targets. It's not quite overbought yet, but it's slowly getting there. Now, another argument we would have in favor of the dollar is interest rates. Interest rates are moving up and should, over the next 2 months, break out previous highs in a more consistent manner. And we believe that it could make it up to 2.8% on the 10-year benchmark. We think this is beneficial to the US and to the US dollar. It's reflation reaccelerating, and the US being the more dynamic region, we believe that it should profit from it, and with it the dollar. We should also note that US interest rates have a positive differential, which is trending up against all the other majors, and on all the 10 years at least below the 10 years. So it does seem like quite a strong momentum or overall increase of the interest rate differential in favor of the US. Finally, a bit of an indirect argument. This is the Dow Jones Euro Stocks on a weekly basis. We believe that it still has quite a bit of potential, possibly above 4,000, possibly even to 4,400. Time target possibly towards mid this year. The risk index is moving up, but is not overbought yet. And so we see quite a big opportunity in Europe here. As in the US, it's still trending up and will probably continue slightly, but it has pretty much exhausted its targets and it's already overbought. And so what could explain this outperformance of the euro at this late and mature of the euro stocks at this late and mature stage in the cycle is probably that the euro weakens over the next few months. And so we believe that this is another indirect confirmation of the exhaustion that we would see in the euro at the moment to the upside. Now we finally look at the last chart, and this is the trader's view. So it's a short-term view of the euro with a 60 minutes, 15 minutes, and 4-minute chart. As you can see, there's probably a bit more to go here on the 60 minutes over the next few days. And our targets are giving us potential towards 123.20. And the risk index is not quite overbought yet. That said, on the 15 minutes, we've reached our impulsive 2 targets. We're pretty much extended and we're overbought. And on the 4 minutes, we may have attempted an intermediate top here. Now, if we look at the different levels to watch to the downside once it eventually turns, we would take our corrective targets down, which often corresponds to the bottom of our envelope here. And so on the 4 minutes, it's around 122.30 to watch. On the 15 minutes, it's around 121.50, and on the 60 minutes would be around 120.40 or 120.30, which is a very interesting base here, which has been worked through since the beginning of January. So we still think this is an exaggeration and that we should see some retracement on the euro-dollar. Yet, remember, markets can stay irrational longer than you could stay solvent. So please keep all your money management rules in place. Thank you very much and have a very good week.